Hello, everybody. Another episode here of the Elliot and Jason show. I know it's been a few weeks. Jason's been out and about, and I've been starting a new job, so been kind of busy with that. But we thought we'd get together and talk to you all about something that's been burning on our minds recently, and that is related to credit card debt. So the focus of our conversation today will be on um, credit card debt. And to start out with, we're going to talk about from a historical perspective where we stand or how credit card debt came into play. And Jason, you have some thoughts on that in terms of like what the history of it is?
Yeah, this is something that I'm really concerned about is credit card debt. I think it's almost like a silent crisis. People don't like to talk about their credit card debt because they think that they're going to be judged because of it, because people shouldn't have credit card debt. People are going to think they're irresponsible. Yet we're living in a society where the cost of living just exceeds what people's income are, and they just really don't have a choice at this point. I think it's really important to understand a brief history of credit cards and how we got to where we are today, where people are paying, say, around 30% interest on their credit card debt. So I would say kind of the modern credit card probably started around 1949, 1950 with something called the Diners Club card. And it was something in the New York area where people would go to dinner at certain restaurants that were part of this program and then pay for the dinners later. That became a very popular program, and department stores started to do similar type cards where they extended credit to their customers. Continued success, and then the banks picked up on it, and eventually in the 80s, I think you started to see a real pickup in widespread use of credit cards with companies like Visa, MasterCard, American Express. So at first, I'd say in the 70s, there was questions whether it was going to be a profitable business for the banks. A lot of this has to do with usury rates, understanding what usury rates are. Usury rates are laws that set a maximum limit on loan interest rates at the state level. Well, in 1978, in the Supreme Court case of Marquette National Bank, the Supreme Court said that a bank can charge the interest rate of the state where they're headquartered rather than the state the interest rate under the usury rate, the usury law of the state where their customer is located. So just so happens in 1981, I think it was, South Dakota got rid of their usury rate for credit cards. And all of a sudden, you had financial institutions, banks opening up offices in South Dakota and charging ridiculously high interest rates. If you open up one of those mailers that you get, where you're 0% interest till 2026, take a look at the fine print, and there's pages of fine print. It's likely that you may see a South Dakota address in there.
Mm-hmm.
Here's your example. You have a bank opening up in Sioux Falls, South Dakota. Even though the customer may be in a state with a usury rate of 12%, it doesn't matter. They can still charge that customer 30%. I'd say, the usury rates for most states, the averages are probably somewhere between 12 and 16%. Those are there for very good reasons, to protect people. Usury rates have been part of civilized societies for many, many years. I mean, even back in the colonial days, I think Massachusetts had a usury rate of, I think it was 6%. So you have to ask yourself, if we're a civilized society, if we're charging people 30% on credit cards. I think that's a valid question. We've had this deregulation of credit card law to the point that now we're sort of in this catch-22 situation where we have, massive amount of personal household debt that people can't get out of, because once you get in that debt trap, paying 30%, even on a $6,000-$7,000 balance, it's really hard to get out of that situation. And you just got to look at these advertisements that you're getting, and the advertisements on TV. I mean, these banks are honing in on your human instincts to want to enjoy life, to go out to dinner, to go on a trip, whatever the case may be. And some people will say, oh, people are irresponsible, but humans are humans. And some people are simply just using credit cards to get by, to pay the rent,
Yeah.
to pay for their groceries, to pay
Yep.
the electric bill. And we're really in a tough situation here.
Yeah. Thanks for that in terms of context. In talking about, survival techniques and how you get through financially, I know for myself, prior to 2017, I had four credit cards and my overall debt to them was $32,000. And I was paying with interest per month around my monthly payments combined were somewhere in the neighborhood of $4,000 a month that I was paying, with interest on those credit cards. I had maxed out three of them, and one of them I still had some balance remaining. So I just was paying back what I owed to it. And the reasons I was using the credit cards is that I was underemployed at the time. I didn't have a steady job. And I was using credit cards for groceries. I was using it for, even to pay utility bills. I was, calling the electric company and, paying by credit card to get by. And I don't think my story is unique. I know that in the current situation that we're at in a really bad economy, many people laid off and they're losing their unemployment insurance, and they're having to dip into their life savings as well as their retirement, and they're using credit cards. I have quite a few friends that they're using credit cards to pay their mortgage payments, and that's or rent. That's how they're getting by. Um, but they're like I did, and back then my interest rates were astronomical. I think the average was 22% across those four credit cards. And I know in today's day and age, my current credit card, I have one, and it's at 22.5%. So, and I know that I've probably spent too much on that, and I probably do need to pay it off more quickly. But I think some of the issues are that you still have to have credit in order to have a good credit rating. So, a lot of people say, only spend within your limits. But for a lot of people, they have to go outside and use credit cards because they have no other source of income right now. They're struggling. So, do you know of any other stories on your end, Jason, of other people or what you've heard in the news of people having to deal with credit cards in the current state?
So I do watch all these stories on YouTube, and
Hmm.
some of them are heartbreaking. A lot of them are just people getting into credit card debt just to pay necessities, and then there are other people that do get caught up in, I think, the demands of society. You want to go out to dinner with your friends, say you want to go on a date, right? And you want to pay for the other person. I mean, anybody knows now if you go to a restaurant, it could be $100, just for any kind of like decent restaurant. So society kind of, wants you to live life and be a normal person. But at the same time, society's kind of telling you, well, if you can't afford to do it, you shouldn't. So it's a double-edged sword, right? Like you're wrong to stay home and you're wrong to go out and enjoy life. And also, our economy relies on this house of cards. If all of a sudden everybody cut up their credit cards today and relied on cash and relied on debit cards, the entire economy would crash because we're a consumer spending economy, and all the stores and all the restaurants rely on people buying things that they can't afford. It's this double-edged sword that I don't think we're going to get out of anytime soon as an American society.
Yeah, so speaking of which, what can be done in terms of, credit card debt, or what things have been attempted, I guess, either from a government policy perspective or individual consumers or other types of programs that you might be aware of? Do you know what can we do about the credit card debt, or what's been attempted?
And that's a great question, Elliot. I think a lot of us would like to hope that politicians are looking out for the average American, but it's really quite the opposite. Back when Obama was president, he was opposed to capping credit card limits. And, he was the Democratic president. Furthermore, I mean, just kind of evidence that the politicians don't want to help people. In 2009, Bernie Sanders introduced a bill in the Senate to cap credit card rates at 15%, and it went to the floor for a vote, and it lost, I believe it was 33-60, something like that. But I mean, it got slaughtered. Now, nothing's really been talked about, since then, to my knowledge, at a serious level until Trump ran for president this last election. And one of Trump's economic policies was, I want to cap credit cards at 10%. And then right after he was elected, Bernie Sanders posted, I'm looking forward to working with the Trump administration to cap credit cards at 10%. Hopefully, Trump follows through with what he said he was going to do during the campaign, and he tries to cap credit cards at 10% or at some percentage, but it can't be 30%.
Mm-hmm.
Now, I think people might say, well, the credit card companies are going to just stop lending then. If they can't make money, they're going to stop lending. I don't think that's true. I think it may get rid of some of the creditors because it might not be profitable for them, but there will be financial institutions, creditors remaining that will be happy to lend money at the regulated rate. And, we can easily get to that point if there's the political will to do so.
Sure. Yeah, I think it is that double-edged sword that you mentioned in terms of um, that we're a consumer economy. We need people to be buying things, um, and the way that a lot of them are doing is through the credit cards. Beyond what has been talked about in terms of the immediate possible solutions with, capping those credit card limits or the rates, in your mind, what are things that can be done, or where do you see the future of credit card usage? Let's say like 10, 20, like down the line, like as we are older, even older and retired, what will be the state of credit cards, let's say 20 years from now, in your opinion?
In my opinion, I think finance is going to become more decentralized. I think that's going to happen for two reasons, partially because of the advent of the blockchain, partially because governments across the world are looking at central bank digital currencies, which ultimately, in one way or another, to some extent, is going to take out the middleman, the banks, the financial institutions. Once we do that, the fees and these ridiculous interest rates are going to go with it. You're going to get to, more of, I think, a fair economy where people are going to be able to borrow money at a rate that is more just than what we're seeing with 30% plus fees. And I think we're going to see more debate on utilizing the blockchain and central bank digital currencies going forward.
Great. Well, as always, Jason, I appreciate your time and very riveting conversation. Hopefully, everyone out there has learned a thing or two from our conversation, or, please insert your comments below and let us know what you think. Hope you guys have a great day and a great rest of your weekend.
Thanks,
Take care.
everyone. Bye bye.
Thank